Hello, my friends. Today is February 22nd, and this is Markets Weekly. So this past week, we saw the S&P 500 make new all-time highs. But the markets did take a notable tumble on Friday. Some of the common stories for that were weaker than expected US data, February options expiry, and my personal favorite, a strengthening yen. But today, let's talk about two things. First, we have to talk a little bit about gold, which has been on an absolute tear. There are two news stories trying to explain that. They're pretty interesting, so let's listen to them. Secondly, we have to talk a little bit about the Japanese yen, which I think will hold the key to the US equity markets for the next few months. Okay, starting with gold. Now, if you look at this chart of gold prices, you notice that gold looks like it's going to the moon. We seem to be making new all-time highs every single week. Now, December, I was pretty bullish on gold, gave a price target for 2025 of $3,000, and now it looks like we'll hit that maybe next week or any moment. So, what's behind this relentless ascent? Now, we've talked about this before. When it comes to gold, people have many different perspectives. People buy gold for different reasons. One, of course, we can talk about it through a more of a traditional lens, looking at the strength of the dollar. Now, if you look at the dollar index, you can see that the dollar index seems to have hit a high a few weeks ago and has been gradually declining since. Weaker dollar, higher gold prices makes total sense. Another common lens to look at gold prices is through geopolitical risk, and here it's a bit more puzzling. Now, we all know that President Trump has been very determined to end the war in Ukraine and has also opened diplomatic overtures to Iran, Venezuela, and other nations that are usually, I think, in more higher risk regions. And so that would argue for less geopolitical risk, but at the same time, it does seem like Trump is taking the U.S. foreign policy in a very different direction, where they don't want to guarantee the security of Europe anymore. So, in that sense, there is some increased uncertainty. But overall, though, I would expect lower war tensions to put downward pressure on gold, but that hasn't happened. Now, two news stories, though, are also pretty interesting, and I think have some truth to them. One news story is tariffs. Now, as we all know, President Trump really likes tariffs and has talked about putting tariffs on a lot of things. Now, a lot of people who are worried that, well, what if you put tariffs on gold? Then a $3,000 gold bar, if you put a 10% tariff, that becomes a $3,300 gold bar, and we want to get ahead of that, right? And so maybe people are trying to get ahead of potential tariffs and buying gold and importing that into the United States as much as possible. And that does seem to be part of what's happening here. So if you are someone who is trying to move gold into the United States, one way to do that is through the futures market. A gold futures is basically a commitment to purchase 100 ounces of gold per contract. Now, usually this is done by speculators and producers. So if you are an investor and you were thinking that the gold price would go higher, what you can do is you can buy gold through gold futures. You get lots of leverage in a liquid market and can easily have a lot of exposure very quickly. If you are someone who owns a gold contract, you can also stand for delivery. And when that happens, you will, at the delivery date, the COMEX, so this is the warehouse that for the company that operates the gold futures market, will send you 100 ounces of gold per futures contract, and you will wire to them the amount of money for that purchase. Now, usually, though, when people speculate in the gold market, they don't want physical. They just want to speculate in paper gold, basically. So they will close out their futures contract and simply roll it to the next quarterly expiration date. But if you do want to move gold physically into the US, you would just hold for delivery. And that seems to be what people are doing. So if you look at this chart of gold in the COMEX gold vaults, you'll notice that they are absolutely surging. So that tells you that there are a lot of people buying futures and just standing for delivery and having that gold delivered into the COMEX vault. Now, you can have it delivered to your home, of course, but usually what happens is that the gold is, of course, you have title to it, but its physical location continues to rest in the COMEX gold vault or another vault of your choice. Now, where's all this physical gold coming from? It seems like it's coming from London. Now, the futures market is based in the US, but the physical market is largely based in London. So what's happening is that people are buying futures, and the people who are short the futures are delivering gold to the New York Vault and New York COMEX Vault. And a lot of that gold that's being sent to New York seems to be coming out of London. And you can see this where people put lots of gold in the Bank of England's gold vault and now are taking that gold out and shipping it to the US. And this whole disallocation where physical gold is moving from out of the country into the US, in part through futures market, seems to be driving some disallocations in the gold market and pushing gold prices higher. Another way you can see this is gold lease rates, where people, let's say you're sold short a gold contract, you want to deliver physical gold, you don't have physical gold at the moment, you can go out and borrow it to deliver. These lease rates are surging, and that tells you that there is really a shortage, at least in some parts of the physical market. So that is a story that to me makes sense and may not continue. Of course, we don't actually know if Trump really will put tariffs on gold. And ultimately, of course, not all of the gold in the world will flow into the US. There has to be some exhaustion point for this. And one way to measure that is the spread between the spot and futures gold markets. And that spread, there was a very large premium a few weeks ago that does seem to be closing a bit. Okay, another story that is a little bit more on the fringes is gold revaluation. So the United States has tons and tons of gold, and this is a legacy from the Bretton Woods era where we were on a gold standard, where a dollar was pegged to gold and everyone else was basically using dollars. Now we moved off the Bretton Woods system in the 1970s, but on the books in the United States, gold is still valued at $47 an ounce. Again, market price for gold today is about $2,900 per ounce. Now, if we took all the gold that the United States had and revalue it to market prices, that means the United States would be much wealthier by the tune of, say, $700-800 billion. Now, over the past few weeks, there have been comments from Trump officials that we want to use the entire balance sheet of the United States. We want to exploit the asset side of our balance sheet. And that has led some to speculate that maybe that means that we're going to take all our gold and use it in some way. After all, that gold is worth $29,000 an ounce, and on the books, it's only $47 an ounce. Seems like, that's a lot of free money. And that seemed to gain momentum when Elon Musk is talking about auditing Fort Knox. So Fort Knox is a place where a lot of U.S. gold is held. And this is one of the things I love about modern politics. So Zero Hedge had a tweet asking Elon to audit the gold in Fort Knox. Elon actually replied, and Elon, being good friends with the president, seemed to have spoken about this with the president, and you hear President Trump talking about auditing Fort Knox as well, so it looks like it's going to happen. So all this chatter led to some speculation that, hey, maybe the U.S. will be using this asset on their balance sheet. Now, how would this actually work mechanically? No, that's kind of a puzzle. Now, on the one hand, if the U.S. suddenly revalued its gold, it has, say, extra $800 billion, maybe it could, get cash for that from the Federal Reserve. Maybe that increases the cash balance in the TGA, and then the U.S. can spend that. We won't have to worry about the debt ceiling as much. But then expanding that enormous amount of monetary expansion, you could think of it as having an upward pressure on inflation and so forth. Alternatively, maybe you have, take all this gold and you actually go and sell it in the market to raise cash, to do some spending. That seems to me like it would tank gold prices, but that is something else that could happen as well. Now, what is the conclusion of all this speculation? Well, Secretary Bessent basically poured cold water on that in a recent interview. Let's listen to what he said.
One thing potentially that could happen, and people are questioning it, is maybe remarking gold. Elon Musk, who's leading Doge, was talking about maybe going to Fort Knox to make sure those gold reserves are there. That comes under your purview. Do you have any plans to visit Kentucky?
I don't have any plans. I can tell you that we do an audit every year. I can tell the American people on camera right now that there was a report September 30th, 2024. All the gold is there. Any U.S. senator who wants to come and visit it can arrange a visit through our office.
Gold was your biggest holding when you were a hedge fund manager before you divested to become the Treasury Secretary. So you know the value of where gold is right now versus where it's marked on its balance sheet, just north of $40 an ounce. It's close to $3,000. Is it under consideration for this administration to revalue gold?
I think that somehow when we were talking about the sovereign wealth fund and I said monetize the balance sheet, I can promise you that's not what I had in mind.
So it's not under consideration, not on the table.
That's not what I had in mind.
Basically, he's like, what are you guys talking about? That's really not what I meant. And I agree with him. So I watched all the Trump press conferences, and I remember vividly when that comment about using the asset side of the balance sheet came in, and that was clearly in the context of trying to use the abundant natural resources of the United States. Now, again, these people are businessmen, right? So when they're talking about the U.S. debt, they see that as a large liability, around $27 trillion worth of debt. So the United States owes a lot of money, but that's only one part of the balance sheet. The United States also owns tremendous amounts of assets, right? It owns nuclear weapons, tanks, and also millions and millions of acres of land, as well as the mineral riches underneath it. So that could be gold, silver, it could also be natural gas, oil, and so forth. So that discussion was very clearly in line with the Trump administration's effort to get energy prices down, saying that we own a lot of natural resources. We should be using that both to try to get inflation down, but also to try to pay down our debt. So it was in that context this was said, but it seems like it was confusing to the market. So no, the U.S. will not be revaluing its gold, but in any case, the gold prices continue to go higher, and we'll see what happens. Again, seems like it's a very interesting story, but again, nothing goes up in a straight line. Okay, the second thing that I want to talk about is the Japanese yen. Now, if you look at this chart of the Japanese yen, that you'll notice that it's been strengthening notably over the past few weeks. What is the driver for this? In large part, it's the expectation of monetary policy. Now, something very interesting is happening in Japan. Now, whereas inflation for most of the other developed markets has been trending lower, in Japan, inflation has been trending higher. In fact, inflation is about 4% in Japan. It's actually higher than it is in the United States. Now, that, of course, is a problem for the Bank of Japan because, well, they have a 2% target and you are notably overshooting your target. So that has led the market to price in more interest rate hikes. Now, interest rates in Japan are still very, very low. But as the market continues to price in more hikes, that is, and the United States is, either rates are going to stay where they are or be lower in the future, that interest rate differential between Japan and US is going to narrow, and that argues for a stronger currency. And you can see the market pricing in more BOJ hikes by looking at the let's say the 10-year JGB. You can see the 10-year JGB, it looks like a rocket ship. It's going straight up. Now, to be clear, it's still very low, let's say 1.4%. But during that period of time, 10-year yields in the US have been range bound. So if Japan continues to hike, if inflation stays high in Japan, you can expect the Japanese yen to continue to appreciate. Now, the Japanese yen is a wild animal. If you look at a history of yen price movements, you can see that sometimes it can appreciate very, very suddenly. Now, I'm talking about a few percent in a single day. It doesn't happen often, but it's happened before. And it has, over periods of time, also moved a lot over the past few years. So if you have the Japanese yen strengthening, that usually has a direct knock-on effect on U.S. assets because a lot of people finance their positions in U.S. assets in yen. And I'm not talking about big funds who, are globally active and maybe they borrow in yen and buy dollar-denominated assets. I'm talking about just, Japanese investors, be it retail or be it their own investment funds, just having a lot of yen and needing to invest it somewhere. Now, US yields have been higher than Japan, so that's attractive. US stock market have again been outperforming the Japanese stock market, especially when it comes to tech, right? We have all this Nvidia and stuff like that. So it seems like there's a lot of, retail investors. Again, DGens are global, and if we know one thing about DGens is they like US tech stocks. And what could happen is that as a lot of investors from Japan who have invested in US stocks, as they see the US stock market maybe going nowhere, maybe trending lower, as they see the yen appreciate, so they're losing money on the currency side, they're taking losses. Maybe they just, close their positions and go home. And that could easily lead to some kind of avalanche where you say stock prices decline in the US and the yen strengthening, leading off to a basically another deleveraging cycle. Again, we had somewhat of a preview of this last August, but this is something that I think it will be recurring going forward. So I think we should watch the Japanese yen very closely. The more it strengthens, I think the more cautious we should be when it comes to the stock market. All right, so that's all I prepared for today. Thanks so much for tuning in, and I'll talk to you all. Oh, don't forget to like and subscribe, and I'll talk to you guys next week.